The global economic landscape is undergoing a profound transformation driven by a force that is both revolutionary and immensely resource-intensive: the artificial intelligence boom. This technological wave is not just reshaping industries, but is also triggering an unprecedented surge in the construction of a very specific and critical type of infrastructure: AI-native data centers. The insatiable demand for computational power, required for training and deploying sophisticated AI models, has elevated data centers from mere digital warehouses to the foundational pillars of our digital future. They are now the primary determinants of the pace at which nations and corporations can achieve digital transformation, making them one of the most compelling investment narratives of our time. From a financial and economic standpoint, understanding the scale, the drivers, and the inherent risks of this boom is paramount for any serious investor or market analyst. The sheer velocity of growth and demand for AI-specialized data centers is unlike anything we have witnessed in previous technological cycles. As artificial intelligence models become exponentially more complex, their hunger for processing power grows in lockstep. This has created a global spending frenzy, with projections reaching astronomical figures. According to a comprehensive forecast by McKinsey, the global expenditure on data centers is on track to hit an astonishing $6.7 trillion by the year 2030, all to satisfy this burgeoning need for computational capacity. This isn't speculative. The capital is already being deployed at a staggering rate by the world's largest technology conglomerates. Giants like Google, Meta, Microsoft, and Amazon are collectively projected to invest nearly $2.8 trillion into their AI capabilities by 2029. A significant portion of this capital is earmarked not for software or research in the abstract, but for tangible, physical infrastructure, namely, sprawling data centers and the thousands of high-performance GPU chips required to power them. The energy consumption metrics alone paint a stark picture of the scale involved. A single basic query processed by an AI model can consume up to 10 times the electricity of a standard Google search. This exponential increase in energy use, multiplied by billions of daily interactions, underscores the massive infrastructural build-out that is currently underway. However, behind this explosive growth and the seemingly limitless flow of capital, a complex web of pressures and challenges is beginning to surface, creating significant friction and potential bottlenecks for this global build-out. While the AI data center boom is a powerful engine for technological progress, it is simultaneously straining traditional resources and our existing infrastructure to a degree that warrants careful analysis. One of the most immediate and tangible impacts is on the construction sector itself. The rapid, large-scale development of AI data centers is creating an immense drain on construction resources, from specialized labor to raw materials. This diversion of resources is so significant that it poses a real risk of delaying or inflating the costs of essential public infrastructure projects such as roads, bridges, and public transit systems. The numbers in the United States are particularly telling. Private sector spending on data center construction has already soared past $41 billion annually. To put that figure into perspective, it is nearly on par with the total spending by all state and local governments combined on transportation infrastructure. This intense competition for a finite pool of resources is further exacerbated by a structural labor shortage within the U.S. construction industry. The sector is grappling with a wave of retirements from an aging workforce. While stricter immigration policies have curtailed the influx of new labor, creating a perfect storm of high demand and constrained supply, beyond the physical constraints of construction, the most formidable challenge lies in energy and sustainability. The soaring demand for electricity from these power-hungry facilities is a central and escalating concern for energy grids worldwide. Experts and industry leaders are now in a race to develop and implement energy-efficient solutions and intelligent energy management strategies specifically for AI data centers. Without a breakthrough in this area, the continued expansion of AI could become environmentally and economically unsustainable. The sheer scale of the problem is forcing some of the world's most ambitious minds to think beyond conventional solutions. One of the more audacious concepts being actively explored involves moving data centers into space. This would in theory alleviate the energy and cooling pressures on Earth. This is not mere science fiction. It is a direction being seriously pursued by billionaires like Elon Musk and Jeff Bezos. who see off-planet infrastructure as a potential long-term solution to Earth's finite resources. The data explosion is quite literally compelling humanity's wealthiest innovators to seek energy solutions beyond the confines of our own planet. Finally, we must critically examine the financial challenges and inherent risks embedded within this boom. Many of the leading AI companies, including high-profile names like OpenAI, are committing to staggering levels of capital expenditure. OpenAI, for instance, has reportedly committed to spending up to $1.4 trillion on computing power over the coming years. This is occurring even as many of these firms have yet to establish a clear and consistent path to profitability. From an investment perspective, this raises red flags. A portion of this rapid, hyper-aggressive growth appears to be fueled by a degree of market irrationality and a fear of missing out rather than purely sound financial fundamentals. This dynamic creates significant financial risk. Should the market's enthusiasm for AI cool? Or if the projected returns on these massive investments fail to materialize in a timely manner, we could face a sharp correction or even a market collapse, with cascading effects across the technology sector and the broader economy. In conclusion, the AI data center boom represents a pivotal and defining economic trend of this decade. It is a sector characterized by extraordinary growth, driven by a fundamental technological shift with a voracious appetite for capital and resources. The investment opportunities are undeniably immense, but they are intrinsically linked to a formidable set of challenges. The strain on construction resources, the unprecedented demand on global energy grids, and the significant financial risks associated with sky-high valuations and unproven profitability models cannot be ignored. For investors and market observers, the path forward requires a dual focus. Capitalizing on the immense potential of this technological revolution while maintaining a disciplined, clear-eyed assessment of the very real infrastructural and financial hurdles that lie ahead. Navigating this landscape successfully will be the hallmark of astute investment strategy in the age of artificial intelligence.